hinged mainly on insurance premiums that we provided through group coverage. Now what we are doing is we are layering in this recurring revenue that comes from preventive care, such as the annual preventive health checkups that we launched, telehealth consultations, OPD wallets. And this transition is really designed to move the employer spending from just a reactive payout that happens via insurance to a more proactive health management for the employee and the employer.
Got that. But Abhishek, this is a large investment. You're talking about 200 crores. How will it impact your profitability? And also, how immediately will you have to go for another round of funding? And will you be on track for sustainable margins in the next 2 years or so?
So just a bit of background. So we as an organization have actually been profitable at both EBITDA and cash flow level for the last 2 quarters. So our investments into healthcare is a very disciplined, a very high confidence investment that we are making to actually accelerate our growth in both top line and bottom line that we generate. Our investment is going to come primarily from the existing cash flow reserves that we have and the profit that we have started to generate from the core business of group health insurance. But that said, because you was asked specifically around funding, so like any fast-growing company at our stage, we are always open to further capital infusion, especially if it is helping us accelerate that mission that we have to impact the health of 10 million lives.
All right. There are several health tech startups in India that offer these kind of preventive solutions. What will be your rate, especially now as you straddle both insurance and healthcare services under the same umbrella?
Yeah, I think our advantage really is building this single unified platform that is very seamlessly blending insurance with a more personalized healthcare. So unlike a legacy broker or a single product player that exists in the market, our approach is one, how do we integrate this financial protection with a preventive engagement, employees receiving regular checkups, teleconsultations, diagnostics, mental wellness support, wellness perks under one roof. Number 2, we are leveraging AI a lot, especially for personalized risk assessment. Think of customized health reports. Think of actionable insights that it can generate for the individuals. Number 3, we are also building a nationwide access. So whenever we launch health checkups, it is available India-wide through our 4,000 plus partner locations, and it is very digital first management. And lastly, we are very focused on outcomes. It's not just transactions. Our data, in fact, tracks the employee health risk over a long time period and really helps them improve the actual health of that individual. So it's going from a transaction to a very impact-driven platform that we have built.
Abhishek, quickly, I know you focused on health outcomes, but the outcomes your investors are looking at, revenue and profitability. What are the targets for the next year or so? And secondly, what next for Plum in terms of any other white spaces you're looking to fill in your overall offerings?
No, absolutely. So over the past 5 years, we have truly become the health partner of choice for the India's most forward-thinking tech companies. Think of companies like Zomato, Swiggy, Zerodha, as well as the trusted ally for all the founders who are even starting their company, even a 5 or a 10 people company. We have become that partner of choice. For us, the next natural step in our growth is bringing the same tech-driven, very integrated healthcare approach to the more traditional enterprises. Right now, we have experienced how to provide this to 6,000 plus organizations. Our track record has demonstrated that reliability and scale. Now we want to leverage this experience to really challenge the legacy insurance brokers. This market of employee health insurance, employee health benefits is over 100,000 crore market in India. Our goal for the next 5 years is how do we get to that 10% of the market, right? And the 10% of the market is a huge premium. That means Plum managing over 10,000 crores in premium, right? So that is the kind of goal. It's ambitious, but that's the kind of goal that we have taken. So that's more on the top line. We continue to build this business in a very sustainable way. We want to continue to be EBITDA profitable. But we want to do all of this while staying very close to that vision of how do we drive healthcare impact.
Got that, Abhishek. That's all the time we had. But thanks very much for joining us here today. And we wish you the best and wait to hear more on what Plum does. Thank you.
Thank you so much.
All right. Also on what's brewing, B2B commerce company Moglix is making a big infrastructure push with the launch of its greenfield bitumen processing facility under DRG Industries in Mathura. With carbon-neutral heating, automated lines and an in-house R&D center, the plant is a strategic move to support India's road-building ambitions with future-ready sustainable materials. Backed by Tiger Global, Axel and Alphawave Global, Moglix is currently valued at $2.6 billion. And to talk to us about the road ahead, joining me now is its founder and CEO, Rahul Garg. Rahul, welcome back to Startup Street. Moglix has just inaugurated its greenfield bitumen processing facility under DRG Industries in Kosikala in Mathura. What's the strategic vision behind this foray into the energy and infrastructure space? And given that it is not just a manufacturing site, but includes an in-house R&D center, how critical is indigenous innovation to your long-term strategy?
So firstly, thank you for having us. I think it is always exciting. As Moglix, we started with the simple ambition that we want to partner with Indian manufacturing sector, Indian infrastructure sector, and really enable creating of a Viksit Bharat. And I think as we went through the infrastructure journey, we realized that many of the supply ecosystem is completely broken. Take, for example, I mean, we're starting to have the monsoon season, right? So
yes,
we will soon, I think few months later, we'll find all the potholes in the...
We're already seeing that, Rahul, already seeing that.
So I think, and I grew up in and around NCR to say that we used to have a joke that after every monsoon, you're back to square one of building the roads, right? So
yes,
I think we started to look at that problem and we said, now some of it is a supply side problem. If you don't put high quality material into construction of these roads, you're eventually going to land up with this solution. So therefore, there are two initiatives actually that happened. One, we realized that India needs to move towards value-added bitumen. In technical terms, people call it polymer modified bitumen. People use emulsions. And these products, which are in the Western world, are almost 70% of the roads are constructed using this material. In
correct.
India, that number is 9%. So unless we use the right kind of material, we are not going to create reliable roads, and we will not get rid of the fact that there will be all these safety concerns, and you will start to see some crazy stuff happening in another city, Gurgaon.
Okay.
So that's the first initiative that we started. And then it is very important, this plant is having the R&D because it is bringing the best in class. What is the right way to mix many of these chemicals to construct the road? What is the innovation that, and it will become probably the best R&D center as well as the best manufacturing plant for value-added products in the future.
All right. You know, you've described roads as the veins of Viksit Bharat, and you mentioned microsurfacing emulsions and polymer modified bitumen, that they are some of the innovations that Moglix is betting on to make Indian roads stronger and last longer. But you also claim the plant uses carbon neutral boilers and sustainable heating. So Rahul, tell us, how central is ESG play to Moglix's manufacturing roadmap, especially with future facilities like this one?
Yeah, we think it is very important that these are downstream petro products, but in this processing also there is energy being consumed. And how to make these plants more efficient. So this plant will use 44% less energy as opposed to any plant doing the bitumen processing.
Okay.
And I think that is very, very important because India needs energy efficient manufacturing all around for the future.
All right. Rahul, you know, you've already invested 200 crore rupees in M&A over the last 2 years, including the acquisition of Khatema Fibers. What's the larger play behind these deals, you know, particularly in traditional manufacturing? And with 500 to 600 crore rupees earmarked for FY26, where do you see your next big bets? Is sustainable packaging one of them?
So we are taking multiple bets because we deal in 150 plus categories of products.
Yeah.
We realize that there are at least maybe 50 categories where the manufacturing is not of high quality or there are brands that do not exist. Unlike, I mean, like electricals, we would know a lot of brands existing, but many categories like bitumen packaging, we do not have brands in the country. And therefore, we continue to look at both greenfield as well as acquisitive approach on this. I would say acquisitive is very unpredictable in India because there are many diligence related issues. So we are continuously looking at how can we create at least 2 to 3 manufacturing plants, if not more, in a greenfield manner every year.
All right. Let's go to packaging, which is one of your top 10 categories and is already nearing 500 crore rupees. You expect it to be 1,000 crore rupee vertical soon. What's driving that growth and how are you planning to scale it?
So we see packaging being used in daily lives of consumer, and what may seem like probably 10 years back you would not care about the packaging, but how you brand products, how you deliver products, all of that requires packaging. And with food delivery, e-commerce delivery, FMCG companies becoming innovative on packaging, it's a category which is bound to grow. And we see over the next 12 to 24 months, we should be able to scale this category significantly and continue to become leader in the space. We are already
Okay.
leaders as an online player, but like online plus offline together.
All right. Moglix clocked nearly 5,000 crore rupees in revenue in FY24, and you've significantly narrowed your losses. What were the key levers, Rahul, that drove this financial turnaround?
So we believe that there's mantra at Moglix is speed, scale, and profit. So as you scale, profit automatically improves. So that is the operating leverage that we are driving, as well as I think at every point you reset the company towards a more leaner structure. So I think both of these approaches have continued to make us more and more closer to profitability. We should be crossing it sometime this year, and then
Okay.
continue our journey from there.
All right, finally, my last question. An IPO is on the cards within the next 2 years, you say. When do you plan to begin conversations with investment bankers, and will that kick off by the end of this year?
So we are a Singapore holding company. We are in the process of determining how do we switch back to India, and that has regulatory aspects. So I wouldn't say that we can truly predict the timeline, but we are working on how do we flip back to India, and then we'll start those conversations. But yeah, we do hope to go live in the next 2 years.
All right, on that note, it's time for me to wrap up our conversation. Many thanks, Rahul, for joining us on Startup Street today, and wish you the very best for all your aggressive growth plans.
Yeah, thanks a lot for having us again.
On that note, it is time for us to head into a short break. But coming up next, villa rental platform StayVista bags 40 crore rupees in a Series B round. Will use the funds to expand its offerings, enter new geographies, and a whole lot more. We put the firm's founder on the hot seat to find out more. Stay tuned. Welcome back. You're still with us on Startup Street. India's appetite for luxury travel is evolving, and one startup is riding the wave. StayVista, the luxury villa rental platform, has raised over 40 crore rupees in a fresh Series B funding round led by JSW Ventures, with continued support from DSG Consumer Partners and Capri Global. With over 1,000 high-end homes across 100+ destinations and more than 1 million guests served, StayVista is now doubling down on expansion, tech innovation, and premium guest experiences. As India's $22 billion villa rental market surges, StayVista is eyeing a much larger slice of the pie. Joining me now to discuss this further is Pranav Maheshwari, the co-founder of StayVista. Pranav, thank you so much for joining us here in the studio. It's great to have you here with us in person. You know, like I said, you're a luxury villa and homestay rental startup. You have both sort of a B2C and a B2B business, right? If you can sort of elaborate on what led you on this journey, what you have on offer, and if you can sort of tell us what was the gap that you saw that you were trying to solve for?
Yeah, sure. Thank you for having me over here first. So we are a marketplace, a platform, a very curated platform, and the focus is to build a brand in the homes segment. In India, we have more than 1 lakh of homes. These are high luxury homes across the country. Most of these homes are second homes, and they're not very frequently used by the primary homeowners. So the primary insight was, as an Indian, as a society, over the decades, if you see, we used to earlier stay joint and travel nuclear. Over the period of time, last couple of decades, now we are staying nuclear and want to travel joint.
Right.
So people want to spend a lot more time together, create great experiences around that, and our properties are fantastic for that. So it's a home. You step out of your home, go to a drivable distance across any part of the country. We have most of our properties about 2 to 4 hours in driving distances. You can step in. It's a fully serviced model. We have homeowners on one side. So homeowners provide us these homes. These are beautiful assets. They can use their own home for a few nights in the year. Otherwise, we are managing them, renting it out. For them, the maintenance takes care. And we have consumers on the other side. They enter into home without worrying about any standards, and the quality is assured. So it's a fully serviced end-to-end, taking into consideration all the needs, personalized, privacy, as well as great experiences.
Absolutely. And you know, you've raised a little over $4 million in this Series B round, right? You have quite a few plans with the money that you've raised and the funds that you've raised. If you could sort of take us through what's on top of the agenda, where will the money go to begin with?
Yes. So how we build this business is very sustainably. To build today the business, we spend about 30 crores to build almost a 250 crore business today. The new money which we've raised, the company is profitable. We are market leadership position in this segment. The new money is towards focusing in terms of building on a technology to drive more efficiencies, to creating a better bottom line, enter into new geographies and new verticals. So we've just launched Vista Residences in cities. These are premium service apartments catering to corporates over there. And the other focus is to ensure that how do we keep building on a guest service and experience level. So we are creating a training and development school. Right. So we directly and indirectly employ almost 3,000 people today. So most of these people do not come from regular hospitality management schools. So we're creating a learning and development center wherein we can keep building and providing them the training, which ensures the guest experience continuously keeps raising up.
Right, and you have like sort of a holistic approach to, you know, what you're servicing for.
Yes.
StayVista has scaled to over 1,000 homes across 100+ locations, right? What key operational or tech decisions enabled you to achieve this kind of capital efficient growth? If you could throw some light on what's next and what's the expansion plan, you know, what's the current presence and how many more geographies do you hope to be in?
Yeah. So technology plays a very important role. We are a hospitality first company. However, technology is at the heart of everything. So on the guest side of it, we have our website. Everything is taken care end to end. You can book your meals, predefine your menus. Everything goes over there. On the operation side, everything is driven through apps. We have apps for our villa caretakers, app for our operational teams, and also an app for our home owners. And everything is layered around dynamic pricing and a very personalized kind of an experience. We collect a lot of insights. Most of our guests, almost 70% of them are repeat and referrals. Right. So they've stayed with us some time earlier. We collect those data points. So we exactly know that this person loves his dessert in this manner. And in a group, you can have different people, different generations catering to those needs. So I think that is something very interesting about the model. The expansion plans are big. We want to, over the period of next 5 years, we want to grow it to a 1,000 crore company. And while doing that, we want to ensure that our journey of profitability is not compromised. So we want to continue to build that journey. And in 5 years' time, we want to ensure that we are the trustworthy leading hospitality player in the country. How you have a Taj or a Marriott in the hotel segment, our aspiration is to build a trustworthy brand in the home segment.
Absolutely. And if you could sort of tell us some of, obviously people within India are looking to travel locally as well and look for, properties like this to stay at, like you pointed out. If you could sort of tell us the trends that you're seeing, where are people choosing to go? What are the more, famous locations that people want to go to?
Yeah. So we operate in typically 100 cities. These are all driving distances or taking a one flight distance from where they stay. Few areas which have come up for us, Alibag, Palghar, Sindhudurg, offbeat locations. In Himachal, we are in Kasauli, Chandigarh. We just launched Kashmir last year, which was fantastic for us. We have about 45 homes over there. So largely all leisure travel destinations. And across them, these are most of the homes are a bit offbeat from the primary location or the center point of the city. So these are beautiful properties, great surroundings, an acre of a land parcel. You have a lot of open spaces for creating memories, and a group comes together, the privacy. So those are the kind of homes which we are going after.
Right. And, you did point out that you've turned profitable. Congratulations on that. You had losses last year, but this year you are profitable. If you could sort of, take us through where you hope to end this year, and will you sustain this profitability? What's the plan?
Yeah, absolutely. So principally first, I think we want to build this business sustainably. Over the period of the last 5 years, out of 5 years, 3 years were profitable for us, and we continue that journey forward. The investments, like I said, will be focused towards building in newer geographies and new areas of capability. So we absolutely want to ensure that we continue on this journey of profitability. What kicked in profitability was largely 3 things. Operational efficiencies through use of technology, which we had made investments over the years. So that started kicking in. With the scale which we are today, we can get those efficiencies. A lot of dynamic pricing and smart pricing algorithms really helped us. And for any brand, repeat and referral business. So almost 70% of the guests are repeat and referral. So for them, we're not acquiring new customers. And it's a network effect which has started playing in. So somewhere that leap curve has started for us. That is what we believe in. And we want to continue in this journey while we keep investing in other places. This year, we should end at about a 250 odd crores of business. And while doing that, we'll be almost 10 crores profit.
Great. And so you want to grow sustainably, and that's the target that you set for yourself. All right, Pranav, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you so much.
All right, moving on. The UAE India CEPA Council has launched the Startup Series to fast-track 5 top Indian startups into the UAE. The winners will get full support, mentorship, workspace licenses, as well as residency. 20 finalists are going to pitch to a high-level panel, and the move comes as bilateral trade hits $83.6 billion, up 15% since CEPA began. My colleague Ishwarya Anand spoke to the UAE ambassador Abdul Nasir Al Shali at the launch. Take a look.
Could you elaborate on the broader goals of the UAE India Startup Series? What long-term outcomes are you expecting to come out of this?
To contribute to the non-oil bilateral trade as well as the overall bilateral trade, to contribute to the investments between the 2 countries. We do see startups as an instrumental part of this relationship, and the way this relationship is going to be driven forward when it comes to the numbers that we're targeting, and even higher than those numbers.
So talking about the numbers that you're targeting, how many startups are you looking to onboard via this program? And, what kind of support will they be receiving?
So on the first part of the question, you should ask me once we have concluded the startup series, because there will be 3 different stages. They'll have to submit their pitches. Those pitches will be screened and evaluated, and then they will be coming in person to basically present those pitches. Once they are successful, then they will be basically connected with different entities, different parts of the UAE, where they will be supported when it comes to getting their business license or trading license, getting to understand the regulations, the laws, what do they need to do, what do they need to apply for to be able to operate in the UAE. If they need financing or if they need capital, this also can be done and can be worked out.
Okay. Are there going to be certain metrics in place via which you'll be looking at accepting the applications and who to onboard?
We are looking for interesting startups. We have had a lot of successful stories, Ultrahuman, Ola, Policy, Bazaar, Purple, and other kind of businesses where UAE investors have actually put money into them.
Okay. I also want to understand from you that what are some of the strategic sectors that you're very bullish on when it comes to the India market and something that you'll be looking at very closely?
We're targeting all sectors, and we want all sectors. So there's no limit when it comes to what kind of sectors they should be from, the startups. For example, the companies that I mentioned, they operate in different sectors, and it doesn't mean that one of them is a strategic sector and the other one is not. We're targeting all sectors. Now, if we do get startups that are in certain strategic sectors that are important for both countries, maybe that will be a bonus or an addition when it comes to how we evaluate those startups. But to us, and from where I stand and where the team stands at the embassy, we're looking at everyone with the eyes of making sure that they get a fair shot.
Okay. Are there any specific policy incentives and or funding mechanisms that are being developed under SEPA to facilitate joint ventures between UAE and the Indian ecosystem?
So we have spoken to different partners in the UAE. I'm unfortunately not able to share the details now. But the idea is, so we're not just doing it at the embassy level and in India, but we have also presented the idea and presented the details of it to people back home so that they know that this is happening and this is coming. And there's a lot of interest and there's a lot of excitement back home.
Okay. And since signing the SEPA in 2022, how many UAE-based investments have already flown into the Indian startups?
About
a ballpark figure.
$10 billion US, give or take, to different kind of startups. One of them is Purple that I mentioned, and there are other also startups where the money has flown, and they are from different sectors.
Okay, all right. With increasing bilateral trade and technology exchange, how does UAE plan to support Indian startups expanding into the Gulf region?
So we want to make sure that they know the information that they need to know, and that when they come to the UAE is a great place to expand into, because then whatever projects that they're offering, services or whatever, can be tested on hundreds of nationalities. And once you have done that, it will become clearer to see, okay, since I have tested this product, it works with this nationality, I want to expand in this country next.
One final question, looking ahead, how does UAE envision its role as a global innovation hub, and what role will India-UAE partnership play in that?
Well, this partnership is very important, very crucial for us in terms of supporting the UAE's goals as much as the UAE is supporting India's goals. Startups are a very interesting, very exciting chapter. They feed into this relationship. They are important for the future of this relationship when it comes to economics and trade. And this is why there's so much excitement and so much interest in making sure that this is a great success, and hopefully that we will have even future iterations of the same.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.